Akil, can I ask what is your win percentage expectancy annually? Around 55%. Around 55%. I think my hottest year I hit on, if I'm hot, I'm hitting at like 60, 65. If I'm cold, I typically don't go below 40. I'm usually somewhere around 55%, so right above even, I guess you can say. I try to average 3% a month before any type of money management and stuff like that, because that doesn't happen on a year-to-year basis. It usually takes a fair amount of time for me to get to the next level of my position sizing, but try to average 3% a month. So that puts me anywhere between about 35 to even 60%. I'm going to look at that. I had a 60% year once. I'm going to look at that as an outlier year, 60% year without money management once. That was a really good year. I don't look at that as the norm. Typically, if I can return about between 40 and 50%, then I'm having a really good year. And when I say average 3% a month, that's not every month. That's very important. That's not January 3%, February 3%, March 3%. No, it could be January minus 5%, February plus 10%, March minus 3%, April plus 7%. It could be like that. It's not an exact 3%, but on average about 3%. And if I'm in that area, I know I'm doing good. If I'm above that area, I get scared that I'm gonna give it back. If I'm below that area, I know I'm probably gonna have a hot streak coming. Or I know I better pay attention to my account because I'm doing something wrong. One of the two. Typically, I'm more pessimistic. So even if I'm doing bad, in the back of my mind, I know things will even out. But I do start to look like, hey, I'm always expecting like doom. I guess I'm like, hey, let's make sure the wheels haven't fallen off this thing. Would you say 40 to 50%? Is that off your starting account balance? Yeah, starting account balance. Yeah. For the year, starting account balance for the year. Yep. And obviously, if it's a year where I can hit a good switch in my money management, that's going to boost those returns a little bit. But again, I don't change. I'm very conservative from a money management approach. I don't change my position sizing all too often. It probably takes me about a year and a half before I ever change position sizes. It's just I'm a very boring trader. It's very slow and methodical, but it goes in the right direction. That's one of the reasons. Also, I'm just very conservative with it. I know that I go on, despite the curve being even, I do go on hot streaks and cold streaks. So even if I do hit another level of my money management, I don't switch it until the end of the quarter. So I can go from one unit to a 2 unit in my money management. Like, let's say, what is this, January, February, March? Let's say I do that today, just based on my account total. I actually can't change my position size until I hit the next quarter. So till the June review. So that's something that's I guess another slowdown multiple to go with the smooth ratio slowdown multiple, a double slowing multiple. But I do that because there was a time in my career where I was far too aggressive with changing position sizes, but it got to the point where, obviously when you have a hot streak, your account's going to grow. When your account grows, that's typically when you change position sizes. Well, what typically happens after your account hits a hot streak? A drawdown. So what was happening is I was increasing my position size as I was getting closer to a drawdown, which you can imagine, right? Not the smartest thing. That's why I became very patient with. It doesn't make sense if you think about it. That's like people that say, it's same thing where people. I never got those who were like, yeah, I increased my position size during a hot streak, or I decreased my position size during a losing streak. Well, it's like you're increasing your position size as the risk of you losing just from probabilities gets greater, or you're decreasing your position size as the probabilities, the chances of you getting on a hot streak increases. Like, you shouldn't do that, right? Like you if you're decreasing your position size, think about it like this, right? If Lisa is on a cold streak, and I understand from a psychological perspective, right? Maybe it gets to the point where it hurts. I get that, I guess. But let's say Lisa's on a losing streak. She takes she knows that her and let's say everything is within kind of your realm, right? If you do your back testing, you kind of know what your biggest losing streaks and winning streaks look like. Am I right? That's the value of back testing, right? Lisa can look back and say, hey, I know that like a 10 trade losing streak, that happens, right? So I should be prepared for it. I shouldn't panic. It sucks, but I shouldn't panic. I remember I had a year where I lost 17% in January, right? Probably my biggest, once I started trading good, my biggest monthly drawdown. But nothing, it wasn't near my max drawdown. It sucked, but it wasn't out of the realm where like I needed to panic. So, but let's say Lisa's on this losing streak. She's got 10 trades. She lost 10 trades in a row. She's like, well, I lost 10 trades in a row. It hasn't really affected my account too much. I haven't reduced my position size per my account, but I'm just scared. So I'm going to reduce my position size. Well, if Lisa's following her plan has an expectancy, is based off probabilities, eventually she's going to revert to the mean, right? Whatever the plan says, right? So the more losses she takes, essentially, assuming she's not sabotaging herself, again, the closer she's getting to her win. So what she's doing is she's reducing her position size as she gets closer to her wins. So when she starts winning, she's going to make less profit off of it because she cut her position size, right? So those wins are no longer making up from the previous losses. So she's only digging herself halfway out of the hole instead of the full way. And then, of course, maybe once that winning streak starts, Lisa's like, oh, yeah, I got my 10 trades in a row. I'm going to start increasing my position size again. Keep in mind, those 10 trades never completely took her out of the drawdown. Now she's back to trading a bigger position size by the time the losses come back again. And now you're in the bearish trend, right? Your downward extensions are bigger than your upward pullbacks. Right? Visualize a bearish trend in your chart, right? Your losses are big. You have your winning streak, but because they're lessened, they only retrace to the 50% point, right? And then your extensions are big again because as soon as you got halfway up, you increase your position size just in time to take those losses. That kind of hit me because there was a point where I was like a 70% trader and breaking even. And I was all excited about, 7 out of 10 trades, big man, right? And I looked at my account and I was breaking even and losing money. And I'm like, well, that doesn't make sense. And it's because, right, I would hit these hot streaks. And at the end of the hot streaks, I would be like, man, I'm actually making more money than this. And I increased my position size. And for that small period of drawdown, it took all of my wins away because I was trading double the position size. It was stupid. So I'm very cautious with how I increase my position size. I'm very patient with it. Because part of it is that fear, but there's no need to rush. I base everything swing trading wise off quarters. And part of that is because there's just not that many opportunities, right? There, I don't think you can make any type of decision as a swing trader in a month because how many swing trades are you getting in a month, guys? 10? Maybe? I think that's a pretty good for swing trading. I think 10 is probably a high number, right? I'm talking 4-hour chart, even hourly is that's more intraday, but we can count it a little bit. But definitely 4-hour chart. If you're getting 10 trades a month, obviously it depends on your style and your portfolio, but 10 trades a month that's a busy month for me swing trading. So you can easily go on a losing streak for a month and have it not really mean too much bigger picture. So quarters are big for me. Quarters are big for me, but it's interesting. Yeah. I don't know where we got started, but good. Whoever brought that up, good question. Rudolph says, like making the wrong prediction. Good point. Note to paper. I wrote down that in my trade plan. Heard it in your podcast. The analogy of driving off a cliff. Glenn said George Soros does 30%, and he broke the Bank of England in 1992. There's a drastic, unrealistic expectation of what is a good return. And I think that is hurting so many traders because so many traders have good returns, but because they don't think it's a good return, right? Kind of the grass is greener type of thing, then they ditch something that's really, really good and in hunt of something else that's unrealistic, right? It's like if you have a 30% return annually, right? You're doing better than all the other investment tools out there, right? Your goal is simple, right? Keep doing what you're doing and just flush more money into it. How can this 30% return make me more money? How can I flush more money into my trading account and keep this consistent 30% return? It's ridiculous people out there thinking like, man, if I don't have an 80% return each year, I'm failing. You can go search for that 80% return. Good luck. I'm sure you'll find someone on social media selling that to you, someone that's doing some curve fitting where they had a hot month and they upped their position sizing and all of a sudden it looks like they made 100% return in that month. And I'm pretty sure they did. It's doable, but ask them what happened 3 months after that. They probably went broke trading that stupid position size. Realistic expectations. Realistic. And I'm not saying you can do, I mean, you can certainly do better than 30%. Don't get me wrong, right? Don't get me wrong. You can certainly do better than 30%, especially if you're really good at managing risk and you can be a little bit more aggressive with your position sizing. But again, just have, I don't want you guys expecting, and you guys don't, but just in general, people out there, I don't want them expecting like 100% of return a month is the norm. It's not the norm at all. What is a drawdown? Is it when you take profit out of your account or when it's drawdown is whenever you're losing money. So think about it like a pullback in your trading account. If your trading account or your equity curve, I should say, is like a trend, each pullback is a drawdown. So the drawdown is the period between new equity highs. Little known fact. Did you guys know this? Well done, Tony. Yeah. Tony says, yeah, 40%. My best month was 40% in the month. But we don't talk about what happened the next month. Little known fact, most of your trading life is spent in the drawdown. Did you guys know that? The majority of your trading life is spent in the drawdown, just like the majority of your real life is spent in your bed. That's kind of frightening too. Because a drawdown isn't just, right? It isn't just the losing streak, right? So when you're losing money and you have that pullback, as you may in your chart, that is a drawdown. But even when you start winning after that drawdown, you still haven't made new equity highs. So technically, you're still in a drawdown. Now you're digging yourself out of it, but until you reach that new high watermark, you're technically in a drawdown, right? So that's why I say the majority of the time you are actually in a drawdown. So it's okay to be in a drawdown because you could be winning and you could be in a drawdown. It's okay. And then by the time you make new equity highs, right, it's probably a little bit of a hot streak. And then what happens? A little correction again. You're back in that drawdown. So the majority of your life is spent in a drawdown. And it's not a negative thing. That's just trading. It's a price chart. Your equity curve is a price chart. It's a series of 1 step back, 2 steps forward if you're doing it well. Rudo said, I had a 9-trade winning streak one time followed by a 9-trade losing streak. But I went into the red. That's when I knew the power of money management and trading. Right? You're like, how did it go so good, so bad that quickly? Or he had a 13-trade winning streak and then a 9-trade losing streak. Yeah. That was exactly my wake-up call. That's when I realized that win percentage is rubbish. Because my whole thing was win percentage and I was 70%. I was taking targets early. Taking target early. I was 70% and I thought I was the man out here. And then I looked at my account, it had those little parentheses around it. and that's what it hit me. I'm like, man, I'm focused on the wrong things here. And that's the whole story also behind I started eliminating my mistakes. And trading got boring and it seemed like I was doing bad. I actually started doing good. And that's when I realized that if I can just manage my losses better, not doing the dumb losses, and I didn't really have to do anything different. I wasn't bad at finding trades. That was the thing. I would just sabotage them. I was good at finding opportunities, which I think most traders are. I was just sabotaging my targets. I was sabotaging my stops. So I was cashing out early. I was taking less than what I should have taken on my wins. I was taking more than what I should have been taking on my losses, right? So it was just about evening those things out, right? Keep doing what you're doing, Akil, right? But just work a little bit on being smarter with those losses, right? And you reduce that, boom. And being smarter with those wins, you increase that, boom. And all of a sudden, you're a good trader, right? I don't want to say it's not that hard, but I don't think most traders have a problem finding trading opportunities. I think it's the dumb stuff, right? I don't know if you guys are NFL fans out there. This is a good example before we wrap things up. There's this quarterback out there called Jameis Winston. Famous Jameis, right? He's got a lot of issues. Eat those wins. A lot of issues, but he had a very interesting year because he was a living, breathing, walking 30 for 30. Right? He threw 30 touchdowns, which is awesome. He's got a cannon of arm. He's good. He also threw 30 interceptions. So when you evaluate him, he's like, man, this guy can sling it, but he keeps slinging it to the wrong team. His team is losing because of that. And he's a free agent this year. He just got picked up. But the interesting dilemma is like, do you take a chance on a guy like that? And you can evaluate it you can look at it from different perspectives. You can be like, man, this guy threw 30 touchdowns. That's awesome. Man, this guy threw 30 interceptions. That's pretty bad. But a good coach will look at him and say, okay, well, obviously he can do the right thing. He's got talent, right? At the end of the day, he's got talent. He can pick good trades. The problem is he's doing dumb stuff on the back end. He keeps giving the ball away. And he's not necessarily killing himself on the front end, but the dumb stuff on the back end overshadows the stuff on the front end. So when you look at him, it's like when you coach him, it's like, hey man, you're doing some really good things. You just gotta limit the dumb stuff. Just like do half of the dumb stuff you're doing. And all of a sudden you got 30 touchdowns, 15 interceptions. That's a whole different story. So it's managing the other parts. It's not necessarily the talent level. It's managing the decision making on both ends. Yeah, you got eye surgery. Maybe that helps. We'll see. Brett Favre was the same way. Very aggressive. Just a slinger. Let me take your look at that.